Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into a preliminary proxy statement for the Sherwin-Williams company. It's like peeking behind the curtain before a big shareholder meeting, and trust me, there's always drama brewing under the surface, from voting controversies to shareholder demands, but we'll make it easier than painting a wall, I promise. Sherwin-Williams had a pretty good year, all things considered. They're talking about electing directors, approving executive pay, and even eliminating some rules that required a supermajority vote. But as always, there's one shareholder who wants to make some noise by pushing for an annual lobbying report. Let's jump into how Sherwin-Williams actually performed. In 2024, they delivered record sales, EBITDA, and earnings per share. Even with a tough economic environment, their consolidated net sales hit $23.10 billion. That's 14 years in a row of sales increases. Net income also jumped to $2.68 billion, and earnings per share went up by 14.1% to a record $10.55 per share. They made some serious cash from operations, too, like $3.15 billion. And get this, Sherwin-Williams is committed to giving value back to shareholders. They returned roughly $2.46 billion through dividends and buying back their own shares. They've also increased their annual dividend to $2.86 per share. And they've done that for 46 years straight. The company also just increased its quarterly cash dividend by 10.5%. But it's not just about money. Sherwin-Williams wants to be seen as sustainable. They're focusing on reducing their environmental footprint, innovating their products, and creating a safe and inclusive culture. They've got a council and steering committee overseeing all of this, making sure they're on track. Now about that annual meeting, shareholders of record as of February 19, 2025 get to vote on some important stuff. That includes electing 9 directors. Plus, there is a non-binding vote on how much the top executives get paid. You can attend the annual meeting virtually at the website listed and vote there if you want to. Okay, so who are these people we are voting on? Well, there are 9 nominees for the board, but a few familiar faces are leaving. Arthur Anton, Christine Poon, and even John Morikis are retiring. Robert Gamgort is standing for election for the first time. The board wants a good mix of skills, from expertise in global business and finance to sustainability and technology. They use a matrix to make sure they've got all the bases covered. Corporate governance can sound dry, but it's super important. The board held 6 meetings in 2024, and the independent directors always meet separately to keep things honest. They've got committees overseeing everything from audits and executive pay to nominations and corporate governance. Sherwin-Williams has some serious corporate governance practices in place, including annual elections for all directors, majority voting, and even proxy access for certain shareholders. They also prohibit directors and executives from hedging or pledging their stock and have significant stock ownership guidelines to align their interests with shareholders. Let's talk about executive compensation. The goal is simple: pay for performance. A big chunk of the executive's pay is tied to how well the company does, including the stock price. That means if the stock goes up, they get paid more, aligning their interests with shareholders like you and me. The company also makes a point of not giving executives excessive perks, and they have a clawback policy in case something goes wrong. An independent consultant helps them figure out how much to pay everyone, and shareholders get a say through an advisory vote on executive compensation. To make sure the directors are independent, the board looks at all kinds of relationships. They have standards to make sure there are no conflicts of interest, even down to things like serving on the same SPAN not-for-profit/SPAN board. Sherwin-Williams has policies about lobbying and political engagement. It's all supposed to be transparent and ethical and overseen by senior management and the board. So what's the board recommending you vote for? They want you to elect all their director nominees, approve executive pay, approve the 2025 equity plan, and ratify Ernst & Young as the auditor. They're also asking you to vote for getting rid of those supermajority voting rules, but they're against a shareholder proposal for an annual lobbying report, claiming that information is already available. Now let's talk specifically about what Proposals 5 and 6 entail regarding the request to eliminate supermajority voting provisions. The board is pushing to make it easier to pass certain measures. They want to lower the required vote from span two-thirds slash span to a simple majority for things like big deals with related companies and changes to preferred stock. The key reason for this is they are trying to avoid having corporate governance measures blocked by a small group of dissenting shareholders. Now let's move to the other proposal pushed by shareholders. A shareholder proposal wants Sherwin-Williams to issue an annual lobbying report detailing their lobbying activities and spending. But the board thinks this is unnecessary, saying they already disclose enough information and that this would be too costly and burdensome. So what's my take on all this? Sherwin-Williams seems to be a pretty well-run company. They're hitting their financial targets, paying shareholders, and trying to be sustainable. Their executive compensation seems reasonable, and they've got good corporate governance practices in place. However, the battle over supermajority voting could signal some internal tensions. The board's recommendation against the lobbying report is a bit concerning. While they do disclose some information, more transparency never hurts, especially when it comes to political spending. I believe there are pros and cons, and the board is in the best position to decide, not me. From a market valuation perspective, Sherwin-Williams is a mature market leader. The company's stock trades at a premium due to its brand and consistently high results. This makes the company more defensive against financial crises. While the company valuation might be high, this represents an incredible wealth preservation vehicle. Overall, I'm giving Sherwin-Williams a slightly bullish outlook. While there are some challenges, they've proven they can navigate them. A reasonable price range for this stock would be between $325 and $375 based on a blend of earnings multiples and discounted cash flow analysis. It is very hard to predict the stock price, however. Don't forget to vote your shares. You can find all the details on how to do that in this proxy statement, also available at the website I already mentioned. Thanks for watching. If you found this breakdown helpful, please subscribe for more corporate deep dives. And remember, always do your own research before making any investment decisions.